Hello, good morning to episode 9 of Tax Tips Tuesday from Decimal Accounting Inc. And I'm the owner of Decimal Accounting. My name is Alicia Lowen. This is a live broadcast that I do every week on Tuesday from my Decimal Accounting Facebook page to bring my tax tips to you. And today's topic is a very popular request. I've gotten this request from a few people, and the topic is, what can I write off from my rental income? So if you are someone who has a suite in their home that you rent to a tenant, or perhaps you own a second home or an apartment that you rent, or even a situation where you're doing an AirBNB or a VRBO type rental, you are going to want to watch this episode. So something that people ask me is, what are the categories that I can write off expenses from the rental income that I am earning? Because of course, the rental income is taxable income to you on your personal tax return in Canada. And so you want to be making sure that you get every write-off that you possibly can. So here are the categories for you. So it is advertising. So if you are paying for a listing for your suite on any paid advertising, you absolutely want to deduct that. Insurance, that could be home insurance, it could be tenant insurance. Some people get additional policies that are to protect them in case of damage on the rental unit. Interest and bank charges. Now that is going to include the mortgage interest, which is usually the largest expense. And I'm going to talk in a minute about what to do if it is within your personal home versus what to do if it is a second home or unit that you own. So your mortgage interest, definitely. Office expenses would just be small office supplies type of things. Professional fees, including legal and accounting fees. Okay, so you have to pay your accountant to do your tax return because now you have rental income. Well, guess what? That invoice from your accountant is now tax deductible from the income that you're earning in your rental. So that's good news. Management and administration fees. This is typically just strata. So if you're owning a unit that is part of a strata complex, and this category that says management and admin fees, that's going to be strata fees or any other sort of admin fees that you're paying for that. Repairs and maintenance. Now, a lot of times people will ask me about renovations. And I just had a conversation only an hour ago with a new client who was asking me about renovations. So the thing with a unit, when it is inside your home, your personal home, you don't want to trigger the sale of that home in the future being taxable. And what happens when you do renovations to your house that you also have a rental suite in is those renovations increase the value of the home so that now your home is worth more because you've done these renovations and you can potentially sell it for more in the future. So what I say to people is this category that is called repairs and maintenance is really meant to be just small items like upkeep around the home and around the suite. So for example, if the hot water tank goes and you need to replace that, then yes, absolutely, that's a maintenance expense, but be very careful about claiming things that really are large renovations and trying to claim that under maintenance and repairs because it's not, and it's something that could potentially get audited if you try to claim a huge amount. So my recommendation is do not claim renovations. You're going to get the benefit from it later on down the line when you sell the home. And after that, this category doesn't get used often. It's salaries, wages, and benefits. It's not likely that you have an employee that works at this rental. It's probably you're just managing it yourself. Perhaps in the case if you owned an entire apartment building and you had someone living in that building that is now going to be the property manager and you're paying that person's salary, then yes, that would go under here. But for most individual people, that's not going to be an applicable category for them. The next is property taxes. So yes, absolutely, you want to deduct your property taxes paid. Travel costs, so this would only be if the rental unit is somewhere that you are not. So I have some clients who live in British Columbia and own a home in Alberta that was their home before they moved to British Columbia, and now they're renting it. So if that person has to travel to Alberta to interview new tenants for the suite or go and do maintenance on the suite, then that is travel for a business purpose, and that could be tax deductible travel from the rental income. The next is utilities, so that's going to be things like electricity and heat for the unit, and motor vehicle expenses, which for this I would simplify and just claim mileage and use the CRA rate for mileage. There is a great app that you can use to track your mileage. It is called Mile IQ, and it is a free app for up to 40 transactions. So either do that to track your mileage that is business related for the suite, or write it in a little logbook or track it in a spreadsheet, however you prefer. And then there's other expenses, which you can add extra things. So I will often add something like small furnishings or supplies. So especially in the case where you are running an Airbnb suite and you need to buy things like curtains and towels and bed sheets and soap and toilet paper, all of those things are going to be expenses for your rental expenses. And I would create a new category and call it small furnishings and supplies, and I would put those sorts of items in there. So those are the general categories. And there is also a question of, do I need to be charging GST or PST on my rental income? And that is a bit of a can of worms. So I am going to save that question for next week. So tune in next week for episode 10 of Tax Tips Tuesday. This week's episode is just about what can I write off from my rental income. So I hope that you have enjoyed that information and it is helpful for you if you have a rental suite or home. And if you are not already a tax client of Deximal, then I want to take a moment and just tell you about what our process is during tax season, because we have an entirely online and paperless system that is so easy to use. And because it's online, we're not restricted by geographic area. So my office here is located in Duncan on Vancouver Island, but I have clients already across BC, up and down the island, in northern BC, in the Yukon, in Alberta, in Ontario, and in Nova Scotia. So we don't have one from every province yet. So if you're from Saskatchewan or Manitoba and you're watching this, then help me get to the point of checking off one person from each province at least and contact me. So there's no reason that we can't do tax returns for people in different provinces. The reason that it works so well is I create a custom tax checklist that is for each individual person. So I spend quite a lot of extra time at the beginning of tax season doing this because it is a huge benefit to my clients that I want to make it easy for them so that they know exactly what documents they need to provide rather than feeling like I have no idea what my accountant needs. I'll just shove everything in a box and go drop it off at their office. So we do not do shoebox accounting. Everything is going to be highly organized and efficient. We give you a checklist that is in a website that you sign into, and you can respond to the questions and you can respond to the document requests and upload everything there for us. So that is how we are making it 100% online and paperless and serving people across Canada. So if that sounds like something that you're interested in, then reach out to me, Alicia Lowen, owner of Deximal Accounting Inc. My email is info@deximal.ca, and I look forward to hearing from you. Have a great day.